Hey guys, Omar Khan here with Theta Trading, and today we're going to go over the concept. I'm going to do a live trading demonstration, and we're going to go over the concept of a covered call. What exactly is it? Perhaps you've heard about it in the media. There's a lot of funds out there that write covered calls or sell covered calls. Writing and selling is the same thing. And I apologize ahead of time. I have to do this on my phone, so the video quality may be a little bit poor. However, it still will suffice because I will be sharing my screen. The reason I'm doing this is because I do all my trades on my phone. The great thing is you can do all your trades on your phone anywhere in the world as long as you have a phone, internet connection, and I will show you how to generate cash flow on the stocks that you already own. Okay. Now, without further ado, I'm going to go ahead and share my screen. Okay. So let's go ahead and share the screen. And I'm going to use my trading application. And we go through a company called Interactive Brokers. Now, we have no affiliation with them. The reason we use them is because they are cheap and efficient. Okay. So if you're trading the way we do, and you are trading frequently, well, you obviously want something that is efficient and cheap. Okay. Now, this is my portfolio. And I'm going to go by home screen just to show you how this account's done. Now, this is it. You can see the top. This is a fake trading account. And that's what you should always start off with when you are first learning how to invest and trade. Okay. You can see here, I started this account off here in January of 2023 with $1 million. It won't let me go all the way to the back, but it was $1 million. Okay. Now this account has grown from $1 million all the way to $2,065,000. So that's over a 100% return over the course of just 108.94% as of a couple days ago, but it's about 100%. We'll just call it 100% for the sake of argument, but a little bit over 100% in the course of just over 3 years. So that's an excellent return. So I'm going to show you the concept of covered calls, okay? So these are the stocks I own in my portfolio. As you can see, I own AMD, I own Amazon, IBIT. Now, IBIT is an ETF, which is an exchange traded fund of Bitcoin. So if you're a Bitcoin fan and you don't want to buy Bitcoin, well, you can use the stock market and the equity markets to get exposure. This company here is called Microsoft. Okay. Now I have this company here. It's called MicroStrategy. Again, it's a Bitcoin stock. Holds just Bitcoin pretty much. That's what their major business is. Nvidia, got Nvidia here. I've got Tesla, okay, and I've got Taiwan Semiconductor, okay. So I'm a little bit heavy on some of these companies, but let's take a look at AMD as our first one because AMD is a company, and this is Advanced Micro Devices. Now, why do we hold AMD? The first step that you always look for when you're implementing this strategy, which is selling covered calls on high quality companies, is that there's the high quality part. If you get that wrong, it is, generally speaking, it's not going to work out very well. Stocks go up or down in the long term. I'm being very simplistic here, based upon the amount of money that company makes or doesn't make. Okay. So if the company's continually making more and more and more and more over time, generally speaking, that stock will go up. Now, if I take a look at a 5 year chart here on AMD, right now we're at 285. 5 years ago, this stock was at, go all the way to the end, scroll over. Oh, $75. As you can see where it says PX. Okay. $75 is where this company was. Now it's at 285. Okay. So you see all these weird squiggly lines. What does that mean? Well, these are all the different indicators we look at when we're agreeing to sell our stock. In this case, a covered call. Now, what exactly is a covered call? A covered call is this. If we own shares of a company, and we own 700 shares of this company, okay, and we've had a healthy run up, okay, I'm going to show you what my average cost on this is. Well, my average cost on AMD is $142.90. You can see right here, which is average price, okay, 142.90. So my 700 shares was purchased roughly for $142.90. Now you can see the stock has doubled in price. Okay. So I say to myself, okay, well, this company's had a really good run up. And what we do here at Theta is the first thing we figure out is where do we think the company will be worth a year from now, 2 years from now, 3 years from now, 5 years from now, and even further sometimes. That's the first stage. Okay. Now that is a bit of a complex process, but there are other ways to do that as well. Okay. Now, we always share our data here at Theta. We share our homework. In fact, we even share our trades. The idea is never to copy our trades, but to understand why the trades were done. So in this case, I have 700 shares of AMD. And I'm going to say to myself, I've got 700 shares of AMD. Well, I wouldn't mind getting rid of a couple hundred of these shares. Okay. So and I want to get rid of them at a price that's much higher than it's trading for today. Now it's trading for 285. And I'm going to use the options market. So I hit that tab there, options. On the left hand side, you can see it says calls. On the right hand side, it says puts. And I'm going to explain in future videos exactly what these mean. But for the sake of just simplicity, we are going to do something called selling a covered call. What does that mean? Well, we are going to agree to sell our shares or some of our 700 shares of AMD for a certain period of time and for a certain price. Now, for that, we are compensated quite nicely. Okay. So, in this situation, if I look at my quote back here, I'm going to look at these squiggly lines and say, okay, well, where do I feel comfortable selling it? Okay. So, it's way, way below where I bought it for. I bought it for 142, and now it's at 285. It's had a real big run up, especially since March 30th, where it was just at 193 here, as you can see. Now we are at 285. Okay. So, I wouldn't mind getting rid of some of these shares. So what I'm going to do again is I'm going to enter the options market, okay? Because I want to lighten up my load. I think it's had a bit of a run up, and I may have a time to buy these shares back at a lower price. Okay, so I'm going to agree to sell my shares for $325 a share. So as you can see right here, 325, and I'm going to go to the call side of the equation because what I'm doing here is I'm agreeing to sell 100 of my 700 shares between now and you can see here the dates are at the top. You can change the dates, but we generally stay within 30 days, and there's a very specific reason for that. Okay. Now I'm going to agree to sell my shares on or before May 15th, which is 24 days from now, 325. So what exactly does that mean? I know that's a bit of a difficult concept to understand, but all I'm saying is, you know what? Hey, if the stock goes above 325, okay, I can only get 325. I cannot get, if the stock goes to 350, I still get 325. But check this out. I'm being compensated at $6 a share, as you can see here. $6. It's almost a 2% return in a month, or not even a month, in 24 days. That is a phenomenal return. Now, what happens if it stays below 325? Well, in that situation, I keep the shares and I keep the $6. And I can do this month after month after month. So that is how you can derive a lot of cash flow from some of the stocks that you already own. Okay. So what I'm going to do here is I'm going to go ahead and agree to sell 100 of my shares for 325 or before May 15th, which is 24 days. Okay. Now I'm going to do something called a market order here. Okay. A market order simply means that this is a simulated trading account. So this is not real money. This is just play money. And it's much easier to do in market order. It means, as you can see here in the top right hand corner, it says bid $6.05, ask $6.45. Well, I'm going to get $6.05. Now, if it was a real account, I would use something called a limit order. Okay? And I would dictate what the price I want. I would normally probably do somewhere in between. I would do $6.25, something along those lines. But for the sake of demonstration and simplicity, we are simply going to do a market order here. Okay. Now I'm going to go back to here, go market order, and I'm going to agree to sell, like I said, 100. Now it says here quantity one. What does that mean? Well, each quantity of a covered call represents 100 shares. So what are we doing here? We're simply agreeing to sell 100 of our shares of AMD between now and May 15th for $325. Now the stock would have to go up $40 more here, okay, for this to actually for us to lose our shares. That would be a big, big increase. So that's probably unlikely. At least I think so because it's had a big run up and it could happen. But I'd rather take that 2% for the month just to agree to sell my shares. Okay. Now, if I go back here a little bit, I can be even more aggressive. Okay. I can pick exactly what time frame and let's say I pick a more aggressive price. Okay. Instead of selling it for $325, well, what if I agree to sell for $300? That's still $15 away. Well, hey, look at that. I'm getting paid $12.75 this year. Why is that the case? Well, the reason that's the case is because there is a higher likelihood that the stock goes from 285 to 300 as opposed to 285 to 325. Right? Now you can go like, let's say, for example, I say, you know what? I'm happy to get rid of them for 285. Well, look at that. $19.30 a share. That is what, almost 6.5%, right? That is a phenomenal return. And the worst thing that will happen is that you'll have to sell your shares for 285. But what I want to do here is I want to give myself a bit of leeway on the upside in case the market keeps running. And I wouldn't mind selling my shares for 325. I'm still make a very healthy return. Now, again, like I said, you can pick the date. As you can see here, I'm scrolling here, and you can pick the price. Your choice. Okay. But we stay within a month. And there's a very specific reason for that, which I'll get into, like I said, in a future video. But let's do $6.10 for the 325s. Okay. So we're going to go ahead and do this trade. Limits. Nope. We want to go market order here. And we're going to do quantity one, like I said, and go ahead and sell it. Bam. We go. And there you go. The trade is done. That's it. So I'm going to go over to my orders here and look at the trade. Okay. These are some of the trades I did today. So here's AMD. As you can see, AMD sold size one, price $6 and 6.1, which is $6.10. Now, $6.10 times 100 shares is 610 US dollars. That's where it says here, net amount. As you can see, the commission here, 78 cents. This is why we use Interactive Brokers. So if you're using a different platform, like, whatever, they're charging you $9, $8, $10 a trade, that can really add up, okay? It can add up to thousands, hundreds of dollars, depends on how much you're trading per month. Now, what is my obligation over the next month? Well, it's not a lot. Maybe the stock goes above 325 between now and May 15th, or it doesn't. So now that I've done this, I don't have a lot of work to do. And this is another wonderful thing about this strategy. It doesn't require a lot of time. So if you're a busy person, you got a family, you got a job, you got different things going on in your life, well, you don't have to spend all day looking at your phone because that's not the point. This is a strategy that you can implement on your phone. Doesn't take a lot of time once you get up to speed, and that's the key, get up to speed, okay? But you have to be disciplined. But once you do get up to speed, you can do these trades really nicely on your phone. It may only take a few minutes and you're done. That's it. So that's the only thing that'll happen. Now, what are some of the things that we look for when we're doing a trade like this? Well, we want to take a look at how many shares we have. We have 700. We never want to sell put that is greater than the amount of shares we have. Now, let's do one more, just for the sake of argument. Let's do an Amazon trade, okay? Now, AMZN. Again, we stick to high-quality companies. You can see I have 200 shares. So I can do another one here, okay? So Amazon's trading for 240, and it's also had a really good run-up since May 30th. And I'd be happy to get rid of some of my shares. Let's say for about, I think I'd be okay at 265. Okay. And I'm just looking at these squiggly lines. They do mean something to me, and I'll teach you guys what it means, but it does mean something to me, and I'm looking at them. So I'm going to do the same date, roughly 24 days out. Okay. Roll across here, May 15th. And I'm going to go here, 265. Wow, look at that. I'm getting paid $5.90. That is just around 2% for the month. 2% for the month. And what am I doing again? I'm doing the same thing. I'm agreeing. I'm saying to the market, hey, look, if Amazon goes above 265 and stays there between now and May 15th, I'm happy to sell my shares for 265. If it doesn't, I keep my shares. But in both scenarios, I will keep the $5.90. Okay. So to me, to do this every month, it becomes a phenomenal strategy because you're able to extract a lot more revenue and capital out of the markets. You can make some big profits just for agreeing to sell your shares for a price which is much higher than you bought it for. Now, the one thing you don't want to do is you don't want to agree to sell your shares for less than you bought it for. So you can see here, my average cost here, average price, is $213.76 on Amazon. So I'm way above where I bought it for. Not quite double like AMD, but I'm still way above. But I'm cool. I'm okay. I'm like, you know what? I'll get rid of 100 shares. Okay, fine. Again, same thing. We're going to go into the options market. We're going to do this. Now, we're going to go same date here, May 15th, 24 days out, and at $265. And I'm getting paid $5.95. So I'm going to go ahead and do this trade. Again, the same thing, quantity one. Each quantity represents 100 shares. So we only have 200 shares. And we already have one covered call. I don't know if you saw that in the previous screen. So I cannot do any more of this. You do not want to sell a call unless you have the stock. And that's why it's called a covered call, because you can cover it with the stock that you already have in your portfolio. If you don't have the stock in your portfolio, it's an uncovered call, and those can be extremely risky. Why? Let's just say hypothetically, okay, hypothetically, Amazon goes to $500 next month. Highly unlikely, I know, but let's say it does. Well, if it does, you're in a lot of trouble because you don't have those 100 shares. So what does that mean? That means you're going to have to buy them for 500 and then have to sell them for 265. And that's a huge, huge loss. In this particular scenario, it doesn't matter how high Amazon goes. Well, we already have the shares. So this is why it's called a covered call. Okay. So we want to control our risk. This is a great way to control risk because you're getting 2% for the month, not even a month, 24 days. And the worst thing that'll happen is you'll lose your Amazon shares for 265. So let's go ahead and do that trade. Okay, there you go. Done. So I'm going to go ahead and let's take a look at this trade. Okay, Amazon. There we go. And we agreed to. Oh, there we go. Oh, I already had one from before. Oh, here it is. So I got $5.94 because I had to pay some commission. Okay. $594 USD. And that goes right into my account right away. I can do whatever I want with it. And I already know my worst case scenario. Now, you guys tell me, how much time do you think this will take? Well, it doesn't take a lot of time once you get up to speed. So I go back to my orders, look at my trades, and these are my trades for the day. There's the Amazon one. Okay, sold. $5.95 times 100 shares. That equals a net amount of $595. Same thing. Commission again, 78 cents. Extremely efficient. Now all I have to do is sit back and wait between now and May 15th. Amazon goes above 265. Well, I lose my shares, but I keep the $5.95. If it doesn't, well, I just keep the $5.95. And I guess what? I'll do it again next month. And the month after that, and the month after that, and the month after that. So, guys, that's a brief intro into what a covered call is. I will get into a lot more detail. We'll be doing a lot more trading demonstrations in the future. But for now, thank you. And if you have any questions, please let us know.